In this video, I'll be breaking down how much you need to make in order to afford a 2023 Kia Telluride. You should really consider following one of these rules in order to avoid making a huge mistake that'll end up setting you back for years to come, financially speaking. I've also included a link to a free auto quote. You can save up to $600 a year in the description below, but more on that later. There are 4 options I'll be going over today. You can decide on which one suits you the best depending on how into cars you are. Some people just want a reliable form of transportation. Some are willing to sacrifice quite a lot more in order to get the car that they really want. So stick around to the end of the video and find out what method would be best for your situation. This is 4 Real Finance, a channel dedicated to helping you make smart car buying decisions. Before I dive into the first rule, these videos take quite a lot of time and effort to make. Please give it a like, subscribe, comment down below what other vehicles you would like me to review. First rule I'll be going over is the 24-10 rule, which is pretty popular, so you may have heard of it before. This states you should put at least 20% down on the car, you shouldn't finance it for more than 4 years or 48 months, and the payment shouldn't be more than 10% of your monthly gross income. Since the 2023 Kia Telluride has an MSRP of about $35,000, you need to put down $7,000 in this case. And with the average new vehicle interest rate of 3.86% in a 48-month term, this would bring your monthly payment to $630.46. Take note that you're also paying about $2,200 here in interest. Bankrate states that the average monthly insurance cost is $148 a month, but this varies quite a lot from person to person. How old you are, your driving habits, your gender, the demographic, what part of the country you live in. So use that smart financial link I've got down there in the description. It's completely free, takes like 20-30 seconds, and you can get an auto quote, see if you can save a little bit of money. This brings your monthly total to about $778.46. Back to that 24-10 rule, this would mean you'd need a monthly gross income of $7,784, which would add up to about $93,000 annually. I really encourage you to take a look at the opportunity cost here. If you were to buy a cheaper $10,000 car, put what would be your car payment of $630.46 in the market instead, over the course of 5 years with a relatively conservative 6% rate of return, this would turn into about $44,021, gaining about $6,000 here in interest. Take a look at those Acorns and M1 Finance links that I've got down there in the description. Super easy to get started investing, and I highly encourage you to do so as early as you can. Even a small amount of money can turn into something pretty special, so get started investing now. And this is just for the first 5 years. If you were to continue that for 10 years, it would amount to $102,900 in over $25,000 just in interest. And this is just at that 6% rate of return. And for reference, the stock market averages about 10% return per year, so my 6% estimate here is pretty dang conservative. The next rule is my own, and for my rule, I think you'd have at least a 6-month emergency fund, invest 15% of your gross income into your 401k, and max out your Roth IRA and ideally your HSA as well, but I'll leave that one as optional. And I know that this seems like quite a lot of saving and investing, but after that, I don't give you a monthly percentage rule that you have to stick to in terms of spending. So it's up to you to decide how much you want to spend past these saving and investing portions. If you want to go on more vacations, if you want to go out to dinner more, if you want to spend more money on a car, then you can do that once you cover this emergency fund and these investing principles. There's a lot of people out there that say, hey, nothing's guaranteed. Tomorrow isn't guaranteed. And that's definitely true. The average American lives to at least 78 years old, and so I think it's super important to get started investing now. Your family and yourself are going to thank it in the future. Next rule I'll be going over is the Dave Ramsey rule, and he thinks you should have at least a 3 to 6 month emergency fund. The vehicle shouldn't be more than 50% of your annual gross income, and you should purchase it in cash. Given that the 2023 Kia Telluride starts at about $35,000, this would mean you'd need about a $70,000 income. Ideally, it's nice to buy a car in cash. You would avoid having to pay that $2,200 in interest, and your insurance would be a little bit lower. But not everyone has $35,000 in cash that they can put towards a car. The final rule I'll be going over is the 1/10 rule, which was developed by Financial Samurai. Personally, one that I think the majority of people who are trying to build their wealth rapidly should consider. It really doesn't allow you to buy a new vehicle, but it's set up to help you spend responsibly, which reduces your financial car ownership stress and increases your net worth faster over time. This rule is pretty straightforward. It states that you shouldn't spend more than 10% of your gross annual income on a car. It can be new or old, but obviously for the vast majority of people, it's going to be used, and you should own it for at least 5 years, but ideally more. And the theory here behind this is to help minimize your financial stress. It frees up a little bit of money to invest in assets or opportunities that may come up your way, put a little bit more in investing, It's much more stressful and difficult making important life decisions when you're worried about payments each and every month. Once again, this is 4 Wheel Finance. If you have any questions regarding car buying or how much of a car you can afford, please leave them down there in the comments below. And don't forget to give a look at that smart financial link I've got in the description. You could save up to about $600 a year on your auto insurance, and it takes like 20 or 30 seconds to fill out, and it's completely free.